Hi, I'm Debi Peverill, and you're listening to the weekly tips from Painless Financial Training Group. Today I'm talking about how to avoid having a balance owing on your personal income tax return next year. We just finished the 2021 tax season. In fact, last night at midnight was the last time you could have filed on time. So what I have noticed is that most of my clients are disappointed when they have a balance owing at the end of the year. And there are typically two ways this occurs. Either they failed to keep a hold of receipts they could have deducted and reduce their income tax return, or they didn't have enough tax taken off at source. So first one, if you couldn't deduct charity donations or your medical expenses because you didn't have the receipts, then come up with a strategy for holding on to that for next year. Set up a physical folder if you get paper, or a computer folder if you get email for all these receipts, and start holding on to it. The other reason, you need to talk to either to your employer if you have employment income and there hasn't been enough tax taken off. And this can happen when you have two employers. If you haven't filled in your TD1 correctly for one of those employers, then you're not having enough tax taken off to cover the fact that you have two employers. If you have pension income, then you can talk to the pension administrator. If it's Canada Pension or OAS that's causing the trouble, then you need to talk to Services Canada to get that fixed. If all else fails, you can send in installments so that next year you don't have a balance owing. So most people find it a little easier to not receive money if they are in fact going to have to pay it back to the government. Better to never have received it if you don't get to keep it.